Abhishek Gaoshinde is Deputy Vice President, Research at Sharekhan, BNP Paribas, is joining us now to take some questions. Abhishek, good to have you with us here. Good morning. You heard my colleague Sudarshan outline, the views of many on Exide. Your thoughts on this particular development and how we should see it?
See that Exide has been investing in the lithium-ion cell projects. It has almost invested 2,000 crore in the project, but so far it has not announced about its customers' recognitions or that what kind of a tie-up it will have with the OEMs. So now it would be the first of the kind of a tie-up we have seen from Exide side with the any major OEMs, and as we know that the first phase of the project is expected to be commissioned by the beginning of FY26. This gives us a visibility that the company has been entering into the arrangement with the customers, and as the reporter has said that we believe that the more OEMs tie-ups will be in lineup, given that the company has been setting up a capacity with an investment of roughly 6,000 crore, and in first phase it is going to invest 4,000 crore. So one, that the earning visibility is coming into the picture. Second, that the investors have raised concerns earlier that what would happen with this kind of project when some of the OEMs themselves are setting up the lithium-ion project. So with this kind of announcements, it gives us soothing to the investors and comfort to the investors that external parties or outsourcing of the lithium-ion batteries will be continue even in the mid to long-term period.
I think Amar Raja is also setting up a capacity. Actually, a bunch of players are setting up capacities, at least have outlined, and large investments over the next 5-6 years or so. Abhishek, do you think the other kind of point here, these are large global players, right, with their own sort of R&D, etc. Battery technology, is still expected to improve. So in that sense, this also gives that comfort that they'll be in sync. One is, of course, somebody to buy what they produce right now, but the other is, of course, being in sync with the latest battery technology, etc. Because that's an area which will continue to see improvement, prices coming off.
See, what we are hearing that the most of the Indian companies, including Exide, they have a tie-up with the global technology players. So on technology per se, we are not so much discomfortable. What is important is that you have rightly highlighted the change in the technology and the demand per se. So over the period by 2030, more than 100 gigawatt kind of a capacity would be required if the kind of EV evolution what we are expecting. In that case, if this company is setting up a plant of a 6 gigawatt capacity, or Amar Raja is setting up a plant of a 2.5 gigawatt capacity, so I don't think that there would be a demand-supply mismatch kind of a thing would occur. Second is that technology will regularly improve and change, and based on our earlier interaction with the management, this kind of thoughts or concerns have already been built up, that in the case of a battery side, whether it would be lithium ion or some other technology, it would be the content or the material would change, but the basic infrastructure required to manufacture a battery will likely remain same. So in that case, the change of a technology would have a limited impact on the earning visibility of this kind of projects.
A quick word on the valuations of Exide, because Kotak highlights that they have a sell call on Exide because of expensive valuations. Are you concerned about it? And also then, move on to talk about Tata Motors, and how did you read the Q4 JLR, the update that's come on wholesale and retail?
So first is on the Tata Motors, because it has been our topic and I like the stock most. So what I say that at the beginning of the year or somehow in the mid of the year, the company has indicated for a volume of roughly, JLR's volume of roughly 4 lakh units. With this over 110,000 kind of units in the Q4, it has almost achieved its indicated target. So 4 lakh unit works out to be roughly 25% kind of a growth on a YOY basis, which is quite decent, given that in earlier years, company was facing, first is on the demand concern, second is on the production constraint due to the chip issue. Now for Q4, say per se, you say that it is again 16% kind of a YOY growth. We were expecting a 15% kind of a growth. So it is slightly, or what we can say broadly in line with our estimate. The key thing here is that that what kind of a margin that the company would report and what kind of a cash flow would be there. So far, company has been reporting a positive cash flow, and we expect that the cash flow will remain positive in this quarter also, considering the favorable product mix. And second is on the margin side. The earlier the company has commented that it will continue to focus on the sustainability of its performance. So based on that, we consider this kind of a performance a positive for Tata Motors. And so your second question is on the valuation side. So what on Exide's valuation side? So what valuation we can say that the it is very difficult to compare the current valuation with the earlier valuations, because earlier it was completely into the down cycle and the street was largely pessimistic on its performance, given that in case of EV evolution, it was expected that its existing business will come to a toss. But now when it has been doing well in its existing business, that is the lead acid battery business, and second that it is setting up the project, and where it has an earlier moving kind of advantage, we believe that the re-rating in the stock would continue.
All right. Abhishek, we'll leave it there. Good conversation. And thank you very much for taking out the time and being with us here on CNBC TV18. Thank you indeed.